Tonight, global trade is at a crossroads as markets react to Trump's tariffs. China has fired back with a massive 34% tariff on US imports, escalating tensions worldwide. While India isn't at the center of the storm, key sectors like pharma and automobiles are bracing for impact. We break down tonight what it means for India, global markets and the road ahead, all right here on Profit 360, your one-stop roundup for everything you need to know. So let's take a look at what happened in global markets today. The fallout from Trump's sweeping tariffs continues to rattle global markets, sending investors fleeing risk assets. The Dow Jones plunged over 1,200 points, while the S&P 500 and Nasdaq dropped 3.3% and 4.4% respectively. Asian markets have also mirrored the decline, with Japan's Nikkei sliding 4.1 and Australia's ASX 200 hitting an 8-month low. Meanwhile, what's also concerning is oil prices that tumbled more than 6%, weighed down by demand concerns and OPEC Plus ramping up output hikes. The escalating uncertainty in trade policies has understandably fueled fears of a global economic slowdown, keeping investors on edge. And to give me more insight on this, I'm joined by Peter Cardillo, Chief Market Economist at Spartan Capital Securities, to discuss more about the current global market scenario. Good evening, Peter. Thank you so much for your time. I'm going to get right into it. We're looking at global markets today, not seemingly too good, not seemingly too positive. Oil prices have slumped. How much of this is tariff-driven versus broader supply concerns?
Well, it's all about the trade war. And of course, you know, China fired back in a big way. And so that's just adding even more concerns for the market. You know, the markets on a global basis are sharply lower. And of course, here in the States, we're almost repeating what we saw the other day. And so that means that a bear market is not far away for the NASDAQ and S&P 500. By the way, the Russell 2000 entered the bear market territory yesterday. So I think this will continue until somebody blinks. The question is, who will blink? We still have other nations that are probably going to respond. Have to wait and see what the position is on the EU. I believe India is not likely to respond very quickly. We still have to see what Mexico and some of the other big trading partners respond to the tariffs that were announced last Tuesday. What does this mean for the global economy? What does this mean for the American economy? Well, the longer the trade war persists, the worse it's going to get. We're probably headed for recession, and the bond market is telling us that. Just look what's happening in the bond market today. You have the 10-year, which is under 4%. That's signaling that there's trouble ahead. And if the United States sinks into recession, I would say it's a near guarantee that the global markets, the global economies will slip into recession as well. Now, the question is it going to be a mild recession? Is it going to be a steep recession? That all depends on how fast the trade war ends. So it's just a matter of time before we see who will cave in first. Will it be the Chinese? Will it be the Americans? Will it be Canada? Will it be the EU? We just have to wait and see.
So, Peter, if I were to ask you what sectors then in the US are most vulnerable to China's retaliation, because we've seen all of this happening minutes after, you know, China's additional tariffs, and of course, Trump coming out on Truth Social and now saying that this is a big mistake that China has made by slapping these additional tariffs.
Well, obviously, President Trump is saying that, but who started the trade war? So, you know, China is responding. And that's why I say the severity of the tariffs that have been imposed on China and China to the United States is very serious, and it's going to have dire consequences on the economies, both here and in China. And so it's a matter of time of who will say, okay, enough is enough. Uh, and I always sort of like to think that uh, the best dictators uh, in telling governments what to do are the markets. We've seen that many times in the past. We saw that in 2008 when we had a huge crisis on our hand, totally different in scope, but um, it wasn't until we saw a major bank, two major banks, uh, basically go belly up, that the government decided to step in and take action. And of course, the Federal Reserve as well. And they did. And that's when everything turned around. Now, I'm not suggesting that it's going to happen this way this time, but if this trade war continues, I think, it could happen again.
Okay, so then let me ask you this. Market analysts, as we have heard, are increasingly warning of further corrections in the US equities with concerns over tariffs and policy uncertainty and slowing growth weighing on investor sentiment. So with the equities sliding, the sectoral indices plunging, do you see this correction deepening?
I think so. I don't think we're near the end. As I said before, I think we're going to go into a bear market. I don't think we'll be in it for a long period of time. I think, we'll just dip into bear market territory and possibly dip out. But until, we see the impact, especially on inflation, um, um, it's going to be, we're going to see tough markets. That doesn't mean you can't find spots to hide. That doesn't mean there aren't good buys out there. There are a lot of good buys out there now, but it's not going to be a quick snapback. And so it's just a question of waiting.
Peter Cardillo, thank you so much for your time this evening and joining us all the way from New York. This is as Trump's tariff announcements continue and, of course, with China's retaliation.